Welcome to IGTV's Trade Idea. I'm Angeline. Now remember the crazy spending after the first lockdown was lifted? Now imagine you're coming out of lockdown pretty much since the beginning of 2020. This is the situation in China. So today we're joined by Investec's Charles Newsome to discuss how investors can trade this pent-up consumption. Charlie, thanks for joining us. Are you braced for this revenge spending out of China?
I have to say it's really encouraging for the global economy that we're seeing this bounce back in China, and they're actually opening up now. They've obviously had to let COVID loose. There's been some question marks about the ability of their vaccine to work, but I don't think they eventually got to a position where they just couldn't carry on the lockdown any longer. Markets, I think, reading between the lines, have already worked out there will be quite a lot of revenge spending from China coming, and some of the stocks in some of the sectors have been really quite strong. Consumer discretionary, some of the luxury goods names have really performed very well with very little news. And I can only see that's the market thinking, well, that revenge spending that we saw in the West after 2020 will come through to China very strongly. And they love their luxury brands, for instance.
Oh, they do. Now, you spoke about luxury, consumer discretionary. What other sectors will this revenge spending impact? How about commodities, for example?
Well, commodities have had a little bit of a difficult time with a fear of a global slowdown. However, the performance of some of the miners over the last 18 months, 2 years, until the last 6 months or so has been very strong, and they've begun to bounce back. The miners, to me, materials generally look in pretty good shape now across the board. I mean, there are one or two exceptions which we're seeing which don't look so good, but miners particularly, I think, are likely to benefit as well.
How about car stocks? With the luxury end, for example, are they likely to see the sort of uplift similar to luxury stocks?
This is where it gets really complicated with cars. Because of electric cars, we've already seen quite a lot of high price cutting in the last few weeks from the majors, particularly led by Tesla, and their margins will be cut back. I'm never a great lover of car stocks, and they wouldn't be high on my list to own. And generally speaking, I'm just never that comfortable about them as investments. I've always tended to avoid them. Sure, they will do well, I guess, but it's not something I would be top of my list.
How about travel? Do you think this reopening in China is going to see travel moving out, and perhaps Europe and the US and other parts of Asia might benefit from that?
So we've seen quite a strong performance from one or two of the stocks like Booking.com and less so Carnival, which you would think would be beginning to do quite well. Carnival has got quite a lot of debt on the balance sheet, but the cruise business, there's been a lot of capacity taken out over the pandemic. So I would imagine that the cruise lining business will be in a much better place when cruising generally comes back, and they're very strongly supported by the Chinese, I understand. So cruises generally, yes. Booking, we're beginning to see a strong performance from. Market is reading across the opening up from China, I think, there too.
Now, in terms of the economy, we had some data out of China earlier showing that China did bounce back in January. This is according to NBS, the NBS survey. The official manufacturing PMI is rising more than expected. Non-manufacturing also saw a substantial jump, marking an end to the contraction that started in September 2020. Now, those markers are looking up, Charlie, but what kind of indicators are you looking at to show that perhaps this pent-up revenge spending trend might not continue?
Well, one needs to remember that some of these brands like LVMH and Burberry have already performed very strongly in the last, literally since the 1st of January or perhaps before. So one needs to sort of be a little bit measured in your overall approach. I think there's a longer term trend potentially developing here. A number of them don't look particularly expensive, but they have been very strong in the sort of short term, and we wouldn't the last month or so, and I wouldn't at all be a surprised to see a pullback, and that might be an opportunity with investors to start buying them up. One needs to remember that some of these leading brand companies have already had very strong performances. I've been, for instance, very surprised by LVMH, which hasn't really fallen that much after a very strong few years, and the share price was, trading was tough for them during the pandemic. The share prices didn't really fall quite as hard as some of the other sectors, for instance, tech.
Interesting stuff. We'll have to revisit that with you, Charles. Newsome there from Investec. Thank you for watching our Trade Idea. Do tune in for more trade ideas on IGTV.